Hey there, fellow investors. Welcome back. And today we got this crazy red market, and especially the Chinese market. And when we're talking about Chinese market, of course, we're talking about Alibaba, Tencent, JD, Baidu, DD, all these giants, because they're facing these headwinds that are not about their like each individual stock or company. It's really coming about the whole government problem. And this affects all of them somewhat equally altogether. So you remember there was this huge price decline in Alibaba and alikes some time ago when the government started crackdowns on these companies. Then Alibaba earnings came out and they reported lower than expected futures growth and performance, which was previously thought about 30%, but then it went down to approximately 20%, a huge drop, obviously. And now we got DD being delisted from US markets, and SEC, which stands for Securities Exchange Commission, which functions like a police for stock exchange. They are tightening the rules and they are demanding from these foreign companies, especially Chinese and Hong Kong companies, to be more transparent with their books and accounting practices. And these just accelerated this whole sell-off. And some of you might say, why don't you just leave them alone? They're doing great without our nosy government, and that we're shooting ourselves in the foot by not fully adopting this laissez-faire approach and just collect the gains. I get it. I understand. And I love gains. I love when companies are just left on their own. They just do what they do best and we collect the gains. However, remember what happened with Lockheed Coffee Company. And if you don't, this was a Chinese company that was just like Starbucks. They were doing amazing, growing like crazy. And at some point, they were valued at like $9 billion. But they've been established only 3 years prior. So this is crazy growth and really good, like massive opportunity for investors. And Lockheed Coffee, just like most companies from China and Hong Kong, they were not very transparent with their books and accounting practices, but they were gaining a lot of investment capital from US and all over the world. And then later it surfaced that they had inflated their sales over 80%. Their stocks got delisted, their CEO and COO both were fired, hundreds of millions of dollars were lost, company went bankrupt. You might say, well, that's not really a problem for these Alibabas and Tencents because they have these humongous major US investors and these investors know better. Well, the same was true for Lockheed Coffee. They had major US investors and among them was BlackRock, which I'm sure you know. So having major US investors, it does not really give you an insurance that these companies are not doing anything fraudulent. It is a good indicator. However, it's not an insurance. That's why it's crucial to make your own observation and invest in a stock based on what you think and on fundamentals that you believe in, and you have clear evidence of why you are investing instead of just following someone and copying someone without your own thought process. So then this begs a question. Should we just all dump these Chinese stocks and save our dollars while they're still burning and flaming while we still can save a little bit of it? Well, I can't tell you what you should do because everybody has their own risk profile and I don't know what's yours, but I can tell you what I'm going to do. I go back to fundamentals and review my own questions. Is this a risky company? Yes. Why did I invest in this company? Well, because of business fundamentals. Are these fundamentals still true? Yes. Well, in this case, I will happily keep my BABA, Tencent, JD, Baidu without selling. As Robert Kiyosaki said, you're making your profits at the time of purchase, not the sale. And that's kind of true because if I follow the guidelines and I don't buy just one or two individual stocks and I have enough of the diversification up to my own pain tolerance and then just stick to my plan, I will be okay. In my prior video, I mentioned this, that Alibaba could retest lows and go lower. And here it is. And I was comfortable not selling it because I did not purchase Alibaba just for immediate gains and speculative reasons. Alibaba was fundamentally good business that I liked, that suited my portfolio, suited my investing style. And I don't care what short-term movement would be. Go up, go down, doesn't matter. It matters what kind of business I'm investing in, and Alibaba was one of them. And so is Tencent, actually, and so is JD, and so is Baidu. I'm actually invested in all of these. In fact, I don't think it will lose much more, but if it will, I'll still be okay because my investing horizon is much larger, maybe 5 years or more. And also another point is, you remember when great investors go shopping? When there is blood in the streets. And today there's pretty much blood in the streets. So I have some dry powder left. I hope you do as well. And let's go shopping. All right, fellow investors, if you got any value out of this, please like and subscribe. I'll see you later, my friends. Cheers.